Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Monday, August the 24th. Well, a continuation of the first time frame uptrend today. We have a candle with a higher high and a higher low, and the market is now approaching this area of resistance where there was solid downside price rejection from. We can see the shadows on the top of all of these candles here, where the market tried to trade up into this region around 84, 70, all above 84, and the market was sold off. Once again, the market's tried to trade up above 84 and sold off. The bulls certainly weren't strong enough to close the market up there, but by the same token, the bears weren't really strong enough to close the market down near the low. And the market is closed only fractionally below the midpoint level, which means that the bears have some sort of control. Although this is a certain type of a candle, which is called a doji, and the doji candle denotes indecision in the market. And that's where there's been a battle between the bulls and the bears raging throughout the day, and neither side could end the day with any solid control or make any net gain on the day from the open to the close. And that's basically where the market is opened at the close and closed in the same place. It sounds a bit funny, doesn't it? But so we've got this battle of the bulls being in the ascendancy, driving the market up, the bears coming in, driving the market down, and the bulls coming back in and closing there at the same level as the open. So a day of indecision. Now, it is a potential reversal pattern, and we need to watch the low of the current candle for that to be taken out for a potential reversal of the first time frame uptrend. There is a possibility that can happen. And this candle is what we call a star candle, and that's where we have basically we have a gap between the two bodies of the candles. Now we know that we don't really have much of a body on the doji candle, but there is a gap between the body of the doji candle and the previous candle. Now it's very close to being a potential evening star reversal pattern, and that's a bearish reversal pattern. Unfortunately, it's not though, because one of the prerequisites is the candle before the star, which is this candle here. The candle before the star, or the doji star, needs to be a bullish candle and a fairly large bodied candle, and this candle certainly is not. It's a very small bodied candle, even though it's green. So it's not quite a perfect pattern that we'd like to see, but still the implications of this gap of the bodies away from each other, the doji, the indecisiveness in the market, the implications of that are still the same as if we had a typical reversal pattern that we see in the textbooks. We just need to bear in mind that the probability of the typical type of pattern happening is probably more likely rather than this type, and it probably means that potential for more bearishness in the perfect pattern, but still this pattern is quite valid. We need to keep an eye on the low of the current candle. Now, if the market does sell off, then we have support here at the flat Tenkan Sen, which is at 83.15, and then at this previous resistance level at 82.63, and also where we saw the market find support on two previous occasions here, the candle before today and 2 days before that, the market found support at the Kijun Sen, which is at 82.49. So the market could potentially trade down to that area and find support coming back in for the market to rally back up towards this resistance. But overall, though, the first time frame trend is up, so we do need to see a lower high and a lower low for the market to trade down around these regions. Now, if the market does trade down through the Kijun Sen, then we have support down around here, around this level, around 81, where there was buying coming in, and we can see the shadows on the bottom here. And then if that's taken out, then we have support down around the 79.5 level, where the top of the cloud, or the Kumo, is. Just looking at the other, at the Ichimoku indicators and their implications, we're trading up above the cloud, which means that the market has an overall positive bias. We are still trading up above the Tenkan-sen and the Kijun-sen, which means that the market is bullish, and the Tenkan-sen is above the Kijun-sen, which means that the market is bullish. So the market still is quite bullish, but we are in some sort of a fairly large congestion area here. We need to take out the strong resistance level up above 85, but with good support on the way down.